All right. Welcome, guys, to the weekend video. This is Friday evening. It's almost 9 o'clock here in the west of Ireland, and the markets are almost closed. U.S. markets are, yeah, they're pretty much shifting to a close right now. So in the next 10 minutes, I don't expect anything major to happen to kind of ruin what I've already written this evening and what I'm about to say right now. But then again, you know. You can never rule these things out. But I'm going to go for it anyway. We'll see. Risk it for a biscuit. Hey. All right. This is euro dollar. I'll start again with the 4-hour charts and I'll go down to the shorter term then after that. But this is the euro dollar and it's 4-hour chart. So this is what I've showed this evening. This sideways this sideways action over the last month almost now. It's kind of it lends itself to being viewed as a contraction triangle, and I'm not basing that on anything more than just a hunch at the moment. So it's another alternate count at the moment. The previous alternate count is the idea that this peak here last week or the week before last is in fact the completion of the larger 5-wave pattern. Meaning, that would be wave 5 there. Let's see how that plays out. I still can't rule that out either. That's the kind of the nature of sideways markets, is that everything remains open for the until the market concludes or kind of tells us something. Every kind of viable option remains open. So I think we have 3 viable options at this moment in time. We have a possible top in, we have an ongoing wave 4 contracting triangle, and we also have the idea that let me see, that this is wave 1, 2 of wave 3, 4, and 5 in the larger wave 5. So take your pick. It's kind of like throw a dart at the wall at this stage. We will see what happens. I'm veering towards this contraction triangle idea. Just it fits quite well with a kind of let's say an alteration between corrective waves. So we had this kind of pretty choppy, complex flat here, and currently the wave 4 is shown as a flat also. So it's not a rule. It's not that that both corrective waves can't be flat corrections. But there is a tendency to kind of alternate between corrective waves, and a triangle in wave 4 here would provide alteration between both corrective waves, and that's kind of let's say the underlying theory behind what I'm looking at with my eyes. And I tend to go with what I'm looking at with my eyes. So let's say that's 4-hour chart. So the possibility of a contracting triangle wave 4 is something to keep in mind. I'm still of the opinion that we'll see a run up into wave 5 either way. So let's get to the short-term chart and figure out what may be happening. Okay, so yeah, that's the previous wave 3, and also alternate possibility of a high of the high of the alternate possibility. No, I'm getting that wrong. Sorry. Wave 3 and wave 4, and this would be the alternate wave 5 high should that happen. All right, so off the wave 4 low, we're looking at wave 1 and wave 2 possibly complete, and maybe a move up into wave 3 at this moment in time. Obviously, I think it's in a way this is quite an opportune moment, because both alternate counts which I've mentioned, or sorry, 2 counts of the 3 that I've mentioned could be ruled out by a break of uh, 122.05, and price is now sitting at 123. So 100 points lies between here and oblivion for two of those wave counts. If 122.05 is broken early next week, then this high here becomes the high of let's get that label in there as per usual. Should have all this done, but sorry, 122.05. If that's broken, then this previous high, interim high here, becomes the high of wave 5, which I've actually shown there, and I should have just scrolled the chart down, but I didn't. Yeah, so this high becomes the preferred count if we get a break of 122.05. Now I've said that 3 times. Alrighty, so I'm still kind of sticking with the operating wave count at the moment, the one that I've shown. It's not that it's exactly preferred, but it's probably most likely, let's say, at this stage. So I do see this 122.05 holding, and I do see a rally into wave 3. Now, if 122.05 breaks, well, then I'm wrong, and then this previous high becomes wave 5, and then we're turning to face, let's say, we're shifting focus to the downside completely for the longer term. All right, but for the moment, let's work with key support here at 122.05 for the moment, and let's see on Monday if we get a nice kind of push higher, a nice impulse move higher in wave 3, then we'll stick with the current wave count. So that's euro dollar. Let's move on to pound dollar. I'm already stretching the time limit. Again, here's the 4-hour chart. We have 2 possibilities for the current rally up in wave C. It could be a 3-wave affair with, let's show that a bit better. The current view is that it's a 3-wave affair, A, B, and 1, 2, 3, 4, and 5 of C. And there's also a very decent chance that this rally out of wave B here is in fact a 5-wave rally. So we could have 1, 2, 3, triangle wave 4, and wave 5. It would be wave 5 in brackets of C of 4. Excuse me. So both those wave counts view this particular, say, price compression here as a triangle. One views it as a lower degree triangle than the other, and that's what I'm working with right now. So let's get down here into this this possible triangle wave 4 pink. So we have wave A, B, C. Today was a pop in 3 waves. It's also feasible to say that this low here of, let's get a price on that, 139.04, that 139.04 was the final low of wave E, and then that was wave D. I'm kind of going with this. I'm going with the possibility that we'll get a further drop into 139 again on Monday afternoon, let's say, or Monday morning. We'll get this, just a continuation of that narrowing of the range in wave E, and then we'll get a rally in wave 5. And I've shown that as wave C or wave 5. So either way. Again, so we have a triangle possibility here. We have narrowing or a say a range contraction, and usually in any market that you see this happening, you can pretty much bet that there's going to be like a commensurate move. Let's say a recoil out of this kind of compression of the range. Usually, the market kind of tends to satisfy itself by just bursting in one direction or another. So, I think if you see on Monday a break of 138.55 there, that low here of previous wave C, then you can say that we'll count the rally as complete and that the market is beginning to turn down again. And if we get a break of the you could push it to the previous B wave high here, and that is about 141.42. That's a bit of a stretch now to be waiting for a confirmation, but I think if we get out above that trend line at all, after a slight correction, if we get out above 140.50, then the price will be out above the trend line, and we can expect an acceleration higher in wave 5. Current target for wave 5 is at a minimum to break 143.43 at a minimum. So you can expect maybe about 300 points in that fifth wave rally if we get if the current view the current short-term wave count is correct. So as a pragmatic trader, let's say you should watch for a break of either the upper or lower trend line and take that as the short-term trend, like the decision for the short-term trend, let's say for the next few days. Because the 22nd of January, this price has just drifted sideways and the range has contracted for about a month now. I'm expecting that we will see like a capitulation either higher or lower after this. My money at the moment, the short-term money, is on higher into wave 5 to complete that larger pattern. And again, the market will teach me whether I'm right or wrong. So that's pound. This correction is likely to complete quite soon, and we will see expansion again into or an acceleration into a possible wave 5. Let's go on to dollar yen. Forgive my kind of low ebb or my low voice today. I'm feeling it now, so I am. Okay, just the 4-hour chart. We've had a nice bounce this week, and I'm calling this bounce as the initial impulse wave up in a new uptrend in dollar yen. Again, it could be proved wrong, but we've now, let's say, on the 4-hour chart, we've broken. We had this a bullish signal, a bullish momentum signal with a break of the moving average, the 50-period moving average there. This 200 line is likely to start flattening out now. We haven't even seen it actually flatten out in the 50-period moving average yet. Obviously, if I'm correct and this is an impulse wave up, well, then we should see a third wave come our way very soon. We did have the break of the previous wave B there, that wave B low at 107.29, which is again another indication the chips are beginning to fall our way here on dollar yen. The price has kind of rallied nicely away from immediate invalidation. So, and again, we've got momentum signals to the upside again. So we had, if you look at MACD and RSI here, we had a nice upside breaks on both I know RSI is kind of broken down again, but we had a nice upside break on both on the 4-hour chart. So higher low, upside breaks, a break of 50 period moving average technically is looking quite good. The short-term wave count, we keep getting a kind of a punch lower in this final wave C here of an ABC pattern in wave 2. But this evening, I see that the price is now turning higher again out of today's low, so I'm taking that as a positive sign. We have this interim high here that was this morning, as the overnight market closed. So we had 107.13 as the interim high there. So if we get a break of 107.13 on Monday, or on overnight Sunday market, which would be the Japanese market, on Sunday, if we get a break of 107.13, well, then we'll be looking pretty keen for a rally in wave 3, possibly wave 3 brown. I still like the form of that wave 1 up, and I think, if I'm not mistaken, which obviously I can be, but if I'm not mistaken, I think this market is turning and ready to turn. So for Monday, obviously 107.13 is the immediate level to watch, and again a break of 107.89. That was the wave 1 high. Then we're in business at that stage. I have a previous wave 1 here low at 108.44. I think that would pretty much be the confirmation point for a turn in this market at a higher degree. Okay, so let's get on to stocks. Now, this count in the short term in stocks is pretty dicey at the moment. Actually, I see the market has kind of closed higher again, so my short-term count is pretty much out the window at this stage. I'll have to go back and alter that. So again, I get shot in the foot by my desire to get the charts up there and out. So the decline here was counted as a 1-2-1-2 to the downside. I think we can pretty much discard that at the moment. There is also a possibility that we have a 3 waves in an internal kind of ABC pattern here. We haven't had a break of the previous high there, so 25.432. That is still taking the wave 2 label. So again, price is hitting resistance. If we get a failure at resistance, on tonight's update, I was talking about a lower degree head and shoulders possibly forming here right now. So we've got wave 4 here. We've got wave 2 as the head. So wave 4 would be the left shoulder, wave 2 as the head, and possibly again wave 2 here as the right shoulder. You can still probably count that as a leading diagonal. Let's say 5-wave leading diagonal in wave 1. That's a stretch, obviously, but I suppose this short-term count won't be decipherable until Monday is over, and the fact that we're closing up here on Friday is probably quite positive for early trade next week. Let's get to the 4-hour chart and see if we can decipher this in real time. So the price is actually right smack bang in the middle of these 2 moving averages again, and that's not usually a thing that happens for very long. Let's put it that way. I'm still expecting this wave 1-2 pattern to be proven correct. I suppose if you viewed that as a larger wave A and B, you could possibly get a further wave C to complete a second wave at probably up near 26,000 again. I'm going to rule that one out for the moment because I like the structure internally there in wave 2, and I like the fact that we have the bearish cross there on, I like to call it the death cross on the moving averages. I like the fact that the price is still underneath the 200 period moving average, and we've got this short-term head and shoulders pattern here, possibly holding our closing out now at this stage. So for early next week, I want to see this price be repelled again by this resistance area. I've got this band of resistance here between 25,303 and 25,505. So we've got 25,303 here at the previous wave 4, 25,505 at the previous lower degree wave 4, and 25,432 at the previous high labeled wave 2. So 3 pretty significant levels of resistance, and a possible impulse wave to the downside, extreme bullishness all over. I'm wagering again that that this market has topped, and I think a spill down into a third wave is more likely than not. Obviously, early next week, if we see the price being repelled downwards again from the 200 period moving average, well then we're most likely to see a momentum trade to the downside. So early Monday actually it will be an interesting day in terms of, let's say, the medium term outlook for the Dow and for stocks in general. Okay, let's go to gold. Again, we're counting this 1-2 pattern to the upside of gold. We have again another moving average, a bullish sign here with the 50 moving over the 200, and we've got higher low at a further extreme oversold. So let's say here the previous oversold was in about the 35.40 level, and I think our low, the most recent RSI low, if we get a reading here, it's quite hard to get a reading off this anyway. No, doesn't want to give me a reading. We've got a lower, say a more extreme oversold condition at a higher low, which actually sets the market up quite nicely for a rally. It's like a non-confirmation in price from momentum. So let's get to the in the 4-hour chart. We've got a 1-2 and possible 1-2, and a rally expected in wave 3 of 3. Okay, so let's get down to the 1-hour chart and see how that might play out. We obviously have the alternate count here, which would view this as a larger A, B, C pattern. Again, support will come in around the 1295 area, I reckon. And even if this happens, even if the alternate count is confirmed, I don't see much of a fall below, say, 1295. Definitely 1290 should hold the market in the medium term. Okay, so that's the alternate count. The current operating count is that wave 3, that wave 2 green here is complete, and that wave 3 is now underway. I've got a nice pop today, which could be a beginning of wave 1 of 3. So if we project that out, then we'd be looking at wave 1 and 2 of wave 3 blue now underway. So early next week, we'd be looking at a possible bullish Elliott wave signal in gold, which could coincide with a break of resistance in wave 1. Let's see if on Monday 1321 holds. I think if 1321 breaks, then we'll switch to the alternate account and we'll look for again support to come in at around 1295 there, and completion of a larger three-wave pattern in wave 2. Either way, we're looking at completion of a correction to the downside and not a turn in this market. I think gold is setting up for a long-term bull run here, and we just kind of have to be patient for that to materialize. Okay, down to the final market, down crude oil. Now, crude has closed out higher again. It actually broke the 200 period moving average there. Yeah, let's get rid of those. I still think that this market has topped. I think the decline of the 6660s highs counts very well as an impulse wave to the downside, and we're just closing out a correction higher in wave 2. So we have a 1-2 pattern to the downside complete. We'll go down to the short-term chart and we can view that a bit better. Let's go to the 1-hour chart. Yes, so there was it was 66.66, I believe, was the actual high in the cash market. So we have a resistance at 66.66. We have price kind of stalling here today at the 61.8% retracement, Fibonacci retracement. We have a possible three-wave pattern complete, and the way I'm counting this is 5 waves in A, B, C, running flat wave B, and now 5 waves in C. And the price wave A reaches equality with wave C at 63.98. I don't think that'll be hit now, to be honest. I think with a slight close down on Friday, I think we'll probably see Monday. I think we'll see this market turn. Definitely if we get a break of the previous wave B there, which was, let's get a price on that. Previous wave B comes in around $60, $60.67. So if we get a break of 60.50, then I think we've seen the end of this correction higher. It's a three-wave rally to me, and we've got a nice 5-wave pattern to the downside. Wave 1, 3 waves up in wave 2, and now we should be looking for signal of a turn to the downside again, and I think that initial signal will come with the break of that previous wave B there. So for next week, for early next week, that's exactly what I'm going to look for, a break of the previous wave B. We get a nice impulse wave down with a lower high, then a break. I should show a break of the previous wave B if I'm going to talk about a break of the previous wave B. Myself. Don't mind me, I'm just admonishing myself. Okay, so a break of, let's get that level again, 60, around 60.70. So I think if we get a punch into 60.50, then we'll be looking at a possible rundown in wave 3 brown. So next week, the thing to look for is, again, a turn in crude to the downside. And that's what I'll be charting on the short-term charts. That's what I'll be looking for in the short-term charts. So that completes the video. Hope I didn't bore you to death there. I nearly bored myself to death. And we shall see you all on Monday evening, bright-eyed and bushy-tailed, and look for some confirmations next week and some possible trades. Okay, we'll see you then. Have a great weekend. Bye bye.